What's going on YouTube? Mike here, back again with Renegade Forex, and welcome to the 5th video in our free Smart Money Concepts Forex trading course. So if you're new to this channel, if this is the first time or the first video that you're seeing on the channel, you are in the 5th video of a series where we're talking about how to trade refined supply and demand, or also known as Smart Money Concepts. And it'd probably be most beneficial for you to find the playlist that this is on and start from the beginning and come back here, because we've already gone over the basics of supply and demand in an overview video, going through some slides and going through some examples. And then now this is the actual application of supply and demand to live charts. So if you're pretty new to trading, this may not actually make any sense to you. And if it's not making any sense, you can just go back one video in this series and watch the overview video of supply and demand. And so in this video, we're going to be actually drawing supply and demand zones and showing exactly how they react when it's mitigated successfully. And maybe we'll try to find a few examples that actually fail. But I want to keep this really to the point and basic, and cover the basics of supply and demand. And so a few commonly asked questions that I just want to get out of the way. I always want you to remember throughout this entire free course that this applies to any time frame and any financial instrument. Anything that's on a chart, this works on, and it also applies to any time frame. So in a lot of the examples, I'm using higher time frames, but I don't actually trade the higher time frames. I usually trade the 1 minute, the 5 minute, and the 15 minute. And it's just that with the 4 hour and the daily charts, it's a lot easier to see really clear supply and demand in most cases. Once you get used to this, it's just that when you're new to trading and you're going over these concepts, that usually the 4 hour and the daily give a lot more clear examples. It's not that it's unclear on lower time frames, but it's the fact that if you have untrained eyes, it's a little bit harder to see. So a lot of these examples, I'm just going to use like really plainly obvious higher time frame examples. So the next common question is how to actually set up the drawing tool that I'm using in these how-to videos. And so for this video, we're actually going to be using the box tool, which you can see on the lower right hand corner here. It's actually, I guess, technically called the rectangle tool, is what TradingView calls it. And if you don't have your drawing panel or your drawings favorited like this, you can come up to the upper left-hand corner in your icon, your profile icon, and scroll down to right here where it says drawings panel. And if this is turned off, you can just slide it back on. If it's off, your screen will look like this. If it's on, it looks like this. Once you have your drawing panel on, you can come down to the fourth slot down and just go over to the side here a little bit and click. That will then bring a drop down and you can see the rectangle tool right here. And I have this favorited. If you click the star button, it will actually open this toolbar down here that you can move all around your screen. I just keep it in the lower right-hand corner out of the way. So once you have your rectangle tool pulled up, you can just click on the screen and then drag it wherever you want and as far as you want. And so I don't know what yours looks like, but if you want to set it up like mine, once you click a second time on the tool, you will see the settings bar come up across the top. And I am currently using this color set to 15%. And I'm using the background color as the same thing, set to 10%. And the text, if you ever want to have text, or sometimes I do use text on these, is set to this purple. I have the line as 1 pixel. And the reason why there's not a super sharp line is because that's actually this color here, and it's turned down. So it's not like it's just like a transparent line. So now once you have that tool set up, you'll then be able to follow along a little bit more closely with what I'm doing on these charts or on your own charts as well. So let's go ahead and get started. If you watched the break of structure video, which hopefully you did, if you haven't, definitely want to check that out as well, because it'll make a lot more sense with what some of the stuff I'm going to add in this concept here. If you watch that section, you can see this actually probably looks a little bit familiar. This is the same exact area of price on on the Australian dollar and Japanese yen on the 4-hour chart that I went over in that video. And so I'm going to go over basically like the really clear setups here, and redraw the break of structure, and then also redraw supply and demand zones from compared to the last episode. So I may not get the break of structure exactly right in the last video, where I actually drew on the breaks of structure on these ranges, and that's okay. It really doesn't matter. Like I said in the previous video, or one of the previous videos, what's really important is that however you do it in your day-to-day practice and routine, and as long as you do it consistently from day to day, that's what really matters. So I realized that like there may be, if you went back and you compared the two videos side by side, it may draw this as a break of structure and then this as a break of structure, where before I only drew this as a break of structure and stuff like that. And I don't want you to get too lost in the details on this, because we're going to do a totally in-depth video at the end of this course that's putting it all together in just like one fell swoop and one full motion of framing a trade. So I don't want you to try to like piece parts of each video together to actually frame a trade until the end of the course. So that being said, let's go ahead and just get started right here on this same scenario that we've been going over in our examples, and just try to keep it consistent throughout this little mini course. So right here, we have this low, price pulls back and then has an aggressive sell-off, and that causes a break of structure. If you don't know what a break of structure is, like I said earlier, that was actually the first lesson in this course, so you can go back and find the playlist and watch that video again. After the break of structure, we can see price retraces back into this zone and then experiences a sharp sell-off. So what do we see if you watch the previous video, the most recent video giving the walkthrough of supply and demand zones? What do we see in this zone right here? Well, we actually see a perfectly clear supply zone right here. And so we can mark this up by clicking our rectangle tool. We can then hold Control or Command, and it will snap to the bottom of this candle. And then click the screen, and then we can drag it up while still holding Control or Command, and click again at the top of that candle, and then grab this piece here and drag it all the way over. That's how we draw the box. And once the box is drawn on there, we can then illustrate a very clear supply zone. And this supply zone is essentially smart money buying and then selling off aggressively. And so this is really a pretty simple concept, but I just am going to try to go into it as in-depth as possible for you here in this video. And what this is happening, again, we talk a lot more in depth about this in my full course, but what's actually happening here is smart money is buying and then they're selling off aggressively. But when they buy, these orders are actually left open. They don't trade with stop losses, and they don't close orders that go negative. They actually bring price back by buying and selling throughout this pullback. This is all buying and selling as well. And they bring it up into this zone. And when they push price up in here, they're actually closing these buy orders that are up here to just violently sell off and make price move again. So like I said, we go over that in the course I have. You don't really need to know that like in depth to use these basic principles here, but if that's something that you want to learn more about, be sure to check the links in the description below. And so let's continue on finding more supply and demand zones. So after we have this sharp sell-off, we can then see a break of structure here at this point. And we can see price comes down, it rallies back up, it fails to make a lower low here, and then it breaks above this little pullback here, and the market buys for a break of structure. It then pulls back, and what do we have when it pulls back? We have a demand zone. This is obviously a very large demand zone, but we do have a demand zone here, and we can see price pulls back, taps into that, rallies, and barely gives us a break of structure. In the past example, I think we were talking about this here. It barely breaks above it, rallies back down, and what do we have? We have another demand zone right here. So at this point, the way that I keep my charts nice and clean is I would actually move this over here and highlight this candle that actually mitigated it and move it out of the way, because now we have a new range, pulls back, taps into this demand zone, and keeps on going. Price broke structure to the upside, pulls back into, what do we have? Another demand zone. can see here, that's a demand zone where it then wicked and continued on to break structure. It pulled back. It did not actually hit any relative demand zone in terms of the way that we're actually referring to it in this course. Same with here. You're probably asking why I marked this up. Well, this is something we actually go over in our full course, and this is what we call a flip zone that took liquidity. And this actually becomes a much higher probability for price to return to than the actual lowest demand zone in this range. So there is a lot more to it than just marking the lowest demand zone and the highest supply zone, because sometimes price will not actually trade all the way back down to this low point here. And there is a more relevant and more current zone that you can use to trade with. So for this example, for this course, let's just keep it simple and let's always just focus on the lowest point that caused the break of structure to mark as our supply or demand zone. So I guess the highest point that caused the break of structure for the supply zone, the lowest point that caused the break of structure for the demand zone. We can see here in this example, to get back to this one, price pulled back, but it did not actually tap our demand zone and continued on. And so that is something that will happen. Price does not have to actually touch a demand zone in a range. It can actually just continue on going. It doesn't have to do anything. It can do whatever it wants to, whenever it wants, because we can't control price. And so as we continue on through this example, we can see price start to break down. And just like in the last video, it finally causes the break of structure here. Oops. From this low, we can see a break of structure with an aggressive sell-off. And we do see price pulling back up and selling off. And then we do have other supply and demand zones here that we can mark up. We can see price actually trading, and this is actually a great example of price trading back up into a supply zone, but failing to actually respect it and sell off. And so we can see here, we have a pretty clear supply zone. This is one of many different types of ways that we learn to mark up supply zones in the course that I have. We can see that price, it does actually mitigate it several times, but eventually in time, it does trade through it. And it does actually fail to make a lower low here. And so we can see by zooming way out, price sells off, it breaks from that old low, it does pull back, it tries to go lower, fails to make a lower low, continues to rally up into that supply zone where we do have a sell-off, but we're actually at this point in time, it looks like the trend had already reversed, and we continue to come back up, mitigate this again, have one more sell-off, and then continues, and this supply zone no longer holds, and price breaks through it and trades right through it, just like it can at any point in time. And these are picked examples that I have picked to go over because they're clean and clear setups. But there's always going to be times where price will trade through the supply or demand zone. They do not have to be respected. And just because you pick the highest and lowest point does not mean that it's going to respect it, because on a higher time frame, you're always in another supply and demand zone. And so this is where things can get kind of complicated for you, and where if you're just going to use this free information in this course, you always just want to, as soon as you have a break of structure, just use the highest or the lowest point that caused the break of structure as your supply and demand zone in that range. And that's just going to be the simplest way to keep it, to keep yourself consistent in learning these concepts. So just to kind of close out this example, we can see here price then pulled back and tried to continue rallying, but it ended up failing to go lower below this low. And we can look to the left and we can see, well, there's also a demand zone here that price did react from. So we can see that here. It's this last bear candle before the up move. Price comes back, mitigates that, and then continues going long where it breaks structure here. And price then comes back down, tries to go up higher, mitigating this supply zone here, and back down into another demand zone created here. Mitigates that, continues on, and it finally breaks this strong supply zone and this high right here. We can then see it pulls back into this zone. We can use this zone once we have a better understanding of supply and demand instead of waiting for it to come all the way back down here. And we can see that you actually could have framed a trade from this rally here. It pulls back, goes into this demand zone, and goes long again here. You could have capitalized on this small move here. From then, it looks like it starts to reverse, and we're actually up to today, at the time of filming this course. And it looks like, I guess we can just finish this out really quick here. So we have this high that price fails to close above. So this is a wick. We then come back. We have another reaction here, but price sells through, and it then breaks this low. So what do we have? We actually now have a supply zone. Last up move before the down candle. And so some of you, depending on the way you mark your breaker structure, you may have marked this here as your breaker structure. That's totally fine. And that is still a valid supply zone that you can take sells from, even if you're marking your structure here and here. So like I was saying already, really doesn't matter like how specific you are with your structure until you start talking about swing structure. But just doing small breaks of structure like this, as long as you do it consistently, that's what really matters. And so after this break of structure here, price pulls back, it then taps into this supply zone and has another sell-off. And we can see here, actually price did break this little tiny pullback right here, pulled back up into another supply zone, which I'm refining to this candle. Again, we go over more of this stuff in my course that I have. Break a structure, pull back, taps into supply, and sells off. And so that's pretty much it. It's really a simple concept. What makes it challenging is knowing exactly where to place your supply and demand zones. And like I said, the easiest, most basic, simple way to trade supply and demand is always just use the highest or the lowest point that caused a break of structure as your supply or demand zone. So the last up candle before the down move, again, we can see that here. The last up candle before the down move is your supply zone. And then the last down candle before the up move is your demand zone. And again, this is not actually that great of an example, but we can just see that supply and demand. But I am just using this to show that supply and demand zones are everywhere in every market. And so before we wrap up this video, I just want to show you really quick lower time frames and just show you that this applies to any time frame of any chart. So again, just like we did in the last video, I'm going to drop down onto the 15-minute time frame in this range here. Okay, now that we're on the 15-minute time frame, we can see, we can probably, hopefully you can actually start to notice this without me even drawing it, that we do have supply and demand zones everywhere on every time frame. And so we can see here, if we come down, and this is actually one of the older areas that we had marked on the 4-hour chart. If we come down here, we can find a last down move before, you can find the last down candle before the up move, which then comes back to be mitigated and goes on. So that's a demand zone. You can then see price hits it again and continues on. We come over here. I mean, these are literally everywhere, guys. You can mark this on any chart if you want to. Not even following any kind of strategy or anything. We can see here, supply zone, it sells off that. Comes back down, and somewhere back here, this low reacts to some form of demand zone back here, continues on. We can then see that price breaks structure up here on this high, and it then reacts from this demand zone here. So we have a rally up, pull back, a little bit of a ranging, wick, break of structure, pull back, demand zone, and we go long. Okay. And so yeah, it really is that easy to find supply and demand zones on any time frame. The most basic way, just to recap, is always use the last up candle before a sharp sell-off, or the last down candle before aggressive buying happens in a market. So if you want to learn supply and demand more in depth, I do have a course which you can find at the links below. This is a free version of the same principles that I teach in my paid course. I do teach the paid version the same exact style as I'm doing the free course. So in each lesson. In each section, we do have a slide video, and then we actually apply it to live charts. So if you find this style of teaching useful, it's the same exact thing in the course that I do have. And in the course on the supply and demand section, we do go over flip zones. We talk about flip zones that sweep liquidity. We learn how to refine supply and demand zones. We learn supply and demand on multiple time frames. We talk about the inside bar and how to use that as supply and demand. And we talk about all the different ways to mark supply and demand, because there are many different ways in terms of refining it and using different candles based on different scenarios. So if that's something that sounds interesting to you, at least check the links below and see if that's something that can benefit you. Otherwise, this pretty much wraps up the supply and demand video in the 5-step Forex free smart money concepts trading course. Be sure to subscribe to the channel, because next week we're going to be going over the introduction to change of character and how to apply that to your chart as well. That's going to be our 3rd step in the 5-step Forex free course. So like I said, make sure you subscribe, turn on your notifications, and we'll see you in the next video.